Welcome to Trading Nation. I'm Scott Wapner. The chaos in D.C. giving a boost to the safety trade. Check out gold touching a 2-week high Wednesday as stocks remain volatile. The yellow metal up around 2% this year, but it's not getting as much of a bid as some would think. Have a listen to what Double Line's Jeffrey Gundlach had told me about that on the halftime report earlier today.
The price of gold has been kind of off the radar screen. It's interesting how gold can't seem to get any momentum above 1350, yet it doesn't drop. So that's been consolidating sideways. All three of these markets, gold, the dollar, and the 10-year, are intertwined. And they are all consolidating sideways after big moves. And so it'll be interesting to see which way they break.
Let's bring in the traders now. Larry McDonald is with the Bear Traps Report. Bill Baruch is with Blue Line Futures. Bill, are you surprised that gold isn't seeing a bigger breakout? What do you make of what Gundlach said?
You know, I am a little surprised that we didn't take out 1360, but this is a big level up there. I do agree with Jeff Gundlach and the fact that it's consolidating very well. And you really got to back away from the forest to really see these trees. This gold market bottomed in 2015, and it's had higher lows in 2016, 2017. And this has been extremely constructive. I mean, even to a point we almost have a bull flag building since the January spike. One reason I'm extremely bullish that gold is because how bearish I am the dollar. I think the dollar is heading lower. This dollar is unwinding the entire 2014 rally. And I think there's more room to go, another 5%, 7% potentially. And one thing I think is very interesting that more recently has happened is President Trump signed the $1.3 trillion spending bill. And a lot of that, it's going to be the biggest increase in defense spending we've seen in 15 years. If you look at the dollar chart, the dollar index really topped in 2001, 2002. And that was the largest increase in defense spending in decades at that time. So I think we're going to see a lot of pressure on the dollar. And I think gold's going to be have a big second half of the year. I expect it to break out above 1,400 sometime before August or September. And the dollar's going to be a catalyst, but now the trade war can also be a big catalyst.
Yeah, I hear you. Larry, you're a gold bull. So what do you make of the consolidation we're seeing? And do you have any conviction that it's going to start moving higher?
Well, you want to think of the dentists in Cleveland, Ohio. Since Lehman, we've had around 10 major drawdowns in equities, and each time the 10-year Treasury has rallied down to 1.5%, down to 2%. But today, we have a 10% correction in the major equity averages, and you have bonds that are right up around 2.8%. So about 80 to 100 basis points higher. And what's happening is money is going to, I think, flow out of equities and bonds and risk parity. There's about $2 trillion that's moved into this space in the last couple of years. And it's going to move into places like gold. You just don't have the protection. So that dentist in Cleveland, Ohio, over the last 20, 30 years, when his stocks, he's got $1 million in stocks and $1 million in bonds. Normally, if his stocks are down 300,000 or 400,000, his bonds are up 200,000. Today, his stocks are down 300,000, and his bonds are flat to maybe down. So that's going to create a flight of capital out of bonds, out of equities, and into alternatives like gold. I'm extremely bullish at these levels.
Yeah, Gundlach also said he's looking for a negative year for the S&P, so maybe you'll be right. Guys, thank you very much. Good speaking with you today. My thanks to Larry and Bill for being here, and thank you for watching Trading Nation. I'm Scott Wapner. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.